What's up, tycoons? What's up, traders? Super excited for today's video. We got to talk about Lucid. Lucid is about to report earnings this week, so we need to dive into the charts and take a look at some of the fundamentals and see what's really going on behind the scenes with the stock before earnings. Be sure to smash that like button, subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Today's video is sponsored by Simply Wall Street. It's a really amazing platform. They have an awesome app and a really great website. We're actually going to use that today to break down Lucid and take a look at some of the fundamentals. So here we are on the Simply Wall Street platform, and we've looked up Lucid right now. And what we're seeing is that the average analyst price target 1 year out is going to be at $8.22, which puts the stock about 24% higher from its current price. Now we're going to dive more into some of these behind the scenes, on Lucid, but let's actually get right into the chart. Okay. And I want to break things down for you guys. And there's a couple things that I like. All right. First off, if we highlight our RSI right here, remember, this is your relative strength index. This is going to give you the relative strength of a stock at its given price. We see that we have a low here, and then we have a lower low over here. So price action is clearly going lower and was in a downtrend at this moment. But what we see on our RSI is the exact opposite. We see a low, and then we see a higher low. This is a simple term known as bullish divergence, where we're building relative strength and increasing, making higher lows on the relative strength, but decreasing in the price of the stock. And many traders did very good in the Discord trading Lucid around this time and had a very nice run up and rally. So, I do like that we have a very strong demand zone right here from 620 down to about 550, let's just call it roughly. Now, when we actually zoom in here, this white box, you may be wondering, this is our expected move, right? This is what the options market is pricing in as the expected move. It's pricing in a move up to 763 or a move down to about 558. So if you are an options trader and you're looking to, sell some credit spreads, I would look at selling put credit spreads below this level here of 558, or selling call credit spreads above 765, just to be outside of that weekly expected move, and then you can capture some of the IV crush. Now, what I do like about it right now, and I think it's setting up for a good trade, now it'll just be up to you if you want to hold that trade through earnings, is we're currently right at our 61.8% retracement level. Now, if you're not familiar with the fibs, you use these levels here to identify if something is in a trend continuation or trend reversal, because nothing moves in a straight line down and nothing moves in a straight line up. You get a move up, retracement, continuation higher, or you get a move down, retracement, continuation lower. We can see that we had a swing low here and a swing high. We had a strong move up. We've retraced now exactly to that 61.8% level at 660. And you can see we also bounced here previously in the past. So if you wanted to, you could call this a little bit of a double bottom. And, short term, we'd be looking to see if Lucid at the start of the week could be able to bounce off of this level and get a short-term rally to the upside. Now, when you look at these two trend lines right here, okay, these two trend lines here and here actually form one of my favorite chart patterns known as the inverse bump and run pattern. Now, we're looking at this on the daily time frame. So, time frame is going to be key to a lot of the patterns. You have to pay attention to the pattern on that specific time frame to see it develop. Technically, in a perfect world scenario, this inverse bump and run pattern, if it was to play out, we would break this downtrend right here, and then we would come up and test our upwards trend line, and then we would get a breakout that would take us up here to where the top of the pattern began. Now, just because we have a pattern forming doesn't mean that it has been confirmed. So that doesn't mean that this stock can't trade sideways or can't go lower, but we are going to look and see if we can break that trend line. If we do, 694 and 729 are going to be some strong resistance, and 772 is right up here with that expected move for the week on Lucid. So these are a lot of the key areas, right? If this stock really wants to go to the moon, as they say, right? And one thing that I think we could possibly do is come up here to this gap fill, right? Now, this is a 48% rally. So I don't think that would happen just off of earnings specifically, but if this stock can get some sustained momentum, this is a nice big gap up here we have to fill, very close to $10, just under $10, right at 981. right? And these gaps, they tend to fill about 90% of the time, right? Historically. And you can see that very clearly on this chart, right? We have a gap right here, and you can see it ends up filling over here on the chart. We have a gap here on the chart, ends up filling right here. Over here, we have another gap, and it ends up filling over here on the chart. So the big question is when these gaps are going to fill, not necessarily if they're going to fill, right? There is that 10% of gaps that don't really fill. But, if you're looking from a longer term perspective and not necessarily just this week, this is a level where price action could really be drawn towards, is going to be up towards that gap fill there. Okay, so that's what I'm seeing here on the charts and all of the technical levels. All right, we went over some major resistance, the chart pattern we have here. We went over the bullish divergence and the gap up, as well as the demand zone. Let's go ahead and dive deeper into some of the fundamentals behind the scenes. Now, remember, you guys can get a 14-day free trial using the link in the description below for Simply Wall Street. And if you choose, you can also get up to 40% off if you'd like to purchase a membership. That puts the annual plan at less than $200 for the entire year, which is a great deal in my opinion. Now, when we take a look at the price to sales ratio versus the industry, we can see that Lucid's price to sales ratio is still really high, even though the stock is at these depressed levels, right? It's at 21.5 versus the industry average of 6. And when you take a look at some of its peers, okay, or the industry average, yeah, it's right there at 6. Now, when you compare it to some of its peers, you can see Rivian is at a 10.7x, right? And Lucid is almost double that. You have Xpeng here at a 4.8, and you have Neo here at a 3.8, and then you have Polestar at a 3.5. So even though the price of Lucid has gone down a lot, when you take a look, the peer average is 5.7, and Lucid is much more elevated than some of the other peers, such as Rivian, Xpeng, Neo. So that's definitely something you want to keep in mind and, keep in consideration, right? We have the 21.5 times price to sales ratio. The market cap is roughly 15 billion right here. And Simply Wall Street does a really good job of breaking things down into categories, right? So this is the valuation category. We can click here and go to the future growth category and see all of the different future growth criteria. All right, some of the key information, you have the earnings growth rate of 29%, 33.5% EPS growth rate. All right, and when you take a look at some of the earnings and revenue growth forecasts, you can see that revenue is expected to rise in the future, up through 2025. But earnings are not necessarily expected to rise, right? They're actually expected to dip heading into 2024 and then start to rise as we get into 2025. Right now, these are just some of the analyst forecasts. At the end of the day, it's up to you to do some of your own research. But Simply Wall Street has been a really great platform that I've been using for a while, and I'm definitely glad to have them as a sponsor. I'm telling you guys, you won't regret joining up for the free trial. You have nothing to lose. And if you don't want to purchase it, then that's fine. At least you were able to use Simply Wall Street to look up Lucid or look up some of your favorite stocks that you own or that you want to own in the future and see if they're potentially overvalued or undervalued. We just briefly scratched the surface of what Simply Wall Street has to offer, and there's much more beyond this. Thank you guys for watching the video. Let me know your thoughts on Lucid down below. Are you playing it for earnings? Are you holding it long term for shares? Or do you think that this thing is about to crash? All right, I'd love to hear what you guys think about the stock in the comments down below. Smash that like button, subscribe to the channel if you guys are new. I also just started a brand new newsletter. If you guys are interested in a free newsletter that will also be giving free trade ideas as well. Okay, I'm going to put some nice charts in there. Every single week I'll have a couple trade ideas coming through the free newsletter, and you guys can use the link in the description or the link in the pinned comment down below to sign up for that free newsletter.